As you know, we believe that managing and paying off debt is a cornerstone of good financial health and vital to achieving the dignified retirement you deserve. Managing debt includes student loans. In this video, we'll discuss payment options and consolidation. In the next video, we'll discuss the federal student loan forgiveness programs. Let's get started. While there are a number of different kinds of student loans, the most common are the direct loans made by the federal government. Some are subsidized, meaning they were needs-based. These don't charge interest while you're in school, during any deferment period, and for 6 months after graduation. Others are unsubsidized. These require the borrower to pay interest that accrues during the school year, during deferment periods, and immediately after graduation. The interest rate is fixed for life on direct loans. There are a few other types of loans available, such as Perkins loans, Stafford loans, Direct Plus loans, and, importantly, consolidation loans. These kinds of loans each have specific terms on repayment and rules about when interest is charged. The best source for information on these loans is at studentaid.ed.gov. Don't worry, we'll give this to you again at the end of this presentation. Tax treatment of interest. You may be able to deduct $2,500 per year of interest paid on qualified education loans. Here are some of the requirements. Deductibility is phased out depending on income. If you make too much money, you may not be able to deduct the interest. Check the current regulations or call your tax preparer to determine these limits. They can change periodically. No deduction is allowed if your filing status is married filing separately. Now that you understand some of the basics, let's look at a couple of the most popular repayment plan options. But before we dive in here, let me remind you that a real option for you as an educator is loan forgiveness. Watch the companion video on this subject, but remember that in general, your payments must be made in accordance with your repayment plan to qualify for the forgiveness programs. Don't skip payments or make them late. Pay on time. Standard repayment plan. Under this plan, your loan is amortized over a 10-year period. Payments are equal each month until your loan is paid off after 10 years. A special consideration here: to qualify for the Public Service Loan Forgiveness Plan discussed in the next video, you must have made payments to your loan for 10 years. If you've paid the student loan off using the standard 10-year payment option, you won't have anything to forgive. If you're confident that you'll stay in public service for 10 years and meet the requirements for this loan forgiveness plan, you should consider the income-based repayment plan. Under this plan, your monthly payment is based on your annual discretionary income. Generally, your monthly payment is set at 10% of your discretionary income each month, and after 20 or 25 years of service, the balance may be forgiven. There are a couple other repayment plans like extended or graduated, but these are the most common. Another strategy that can be very useful is loan consolidation. Under this option, you can consolidate several loans under one. This may lower your interest rate and allow you to write one monthly check. In most cases, consolidated loans allow the standard and income-based repayment plans. And finally, if the consolidation loan was used to pay off loans that would have qualified for a forgiveness program, they remain eligible for that program. Keep accurate records. It's imperative that you stay organized and on top of your loan, because in addition to the obvious risk to your credit score, missing payments can cause you to be ineligible for the loan forgiveness options. Mark a file for each loan. Keep all important documents related to the loan in the file. Keep notes and phone calls to loan servicers and copies of correspondence. If you're working toward a loan forgiveness program, you should complete and submit the employment certification form annually or when you change employers. Here are some keys to success in paying off your debt. If you plan to apply for student loan forgiveness, make all payments on time. Talk to your loan processor about a consolidation loan. Apply for the income-based repayment method. Don't forget to ask your tax preparer about deducting the interest you've paid each year. Complete and submit the employment certification for Public Service Loan Forgiveness form annually or when you change employers. If you don't think you'll stay in teaching or that you won't qualify for one of the forgiveness options, make your payments on time. You don't need to compromise your credit score. Take all available interest deduction on your tax return each year.